So shall we go live?
Yes, yes, ma'am.
Okay. Very good morning, dear students. Welcome to the session on economics by our very own beloved Nagendra Bhaktha sir. So before we get started, let me introduce sir to you. CA Nagendra Bhaktha, a CA by profession and professor by passion. After retaining the respect of being called a chartered accountant, he chose to practice as a CA in a place, Hebri, along with spreading and sharing his knowledge to the coming young students who aspire to be CA and CS too. Sir believes that studies with fun is a great blend which makes the aspirants achieve their goals with full precision. He has good experience in teaching CA Foundation, CA Intermediate, CA CET, and CA students. He plays multiple roles very effectively as a guide, teacher, mentor, motivator, and friend to his students. Presently, Sir is one amongst the few faculties in Trisha. A warm welcome to you, Sir. Over to you.
Thank you, ma'am. Thank you so much, ma'am. So, everybody, good morning. So, we are in CA Foundation come marathon race. Okay, so now, why do I call it as race? Because we have to finish the portion and the important topics, not all the topics we are touching here, the very, very important topics, and at the same time, some of the mnemonics which we need to know before we enter into the classroom, exam hall. So that exams are nearing, so not even 10 days. So I'm sure that almost all my students have already know about something about economics, correct? Now I can see some students here, Dishaji, Vivek Nayak, Kritika, you all are my students, no? Okay. Good morning, good morning, everyone. So I'm just waiting for some other students to join in. Uh, so how are you? How the studies going? Mahidara, hi, good morning. Yes, Mahidara. Good morning. Welcome to the class. So I'm sure that study is going well, no? I know you students very well. You are in my classroom. Very good. So morning 6:30, getting up and listening to the economics class, that too theory, and you have taken a very good initiative. Correct. No, you are listening to the class. Hi, Omkar. Good morning. Okay, Kritika is asking me, how are you, sir? I am superb, dear. As always, you know that. Okay. Rajeshwari ji, good morning. Welcome to the class. Chalo, uh, let's not drag it. So we are going to the session now. So here you can see that what are the chapters that we are going to cover up in these 3 days. So the first one is about Introduction to Business Economics. We are going to discuss about some of the important topics in Introduction to Business Economics. The weightage for this chapter is somewhere around 6 to 8 marks. So I'm not sure 8 marks ka questions will come from this, but 6 marks onto pakka. So if you see that this chapter, no, wait, I need something to write here. Yes. So from this chapter, no, you can expect somewhere 6 marks. And from here, demand, supply, and consumer behavior, say minimum 16 marks. 16 marks. Yeah, you heard it right. It is 16 marks. Later, in theory of production and cost, again 12 to 16 marks. And meaning and types of markets may again 12 to 16 marks, but 16 marks. I give importance of 16 marks here. And business cycle may somewhere 6 to 8 marks. So putting all this together, the whole this what is that? The whole syllabus is of 60 marks. And you know that you have BCK, right? So you have BCK too. So that's why here, first we will start with Introduction to Business Economics, this chapter, which has somewhere, this is the revision material. So soon we are going to upload this on the Google Drive so that you'll get the link. You can get this revision material. My old students, you have this material already, and there is no much change. So there is nothing change in the revision material because the syllabus is same, no. But for the new syllabus, something extra has added. So that's why this is old syllabus ka last final attempt it is. That should be the best one. So for that purpose, for that matter, you all are here. Okay, Chaitanya ji, good morning. Welcome to the class. So directly, let's not waste the time. I'll continue here. So first, we will be going to the chapter 1, which is Introduction to Business Economics. Business Economics. Now we know that some of the important parts, we will revise it like this. So that what is economics? Economics has come from two Greek words, oikos and nomia. We know this. Oikos means household, nomia means management. So earlier it was just the household management. Now it is nations management. We know that. So this is oikos and nomos. We call it as oiko and nomia. Oiko and nomia. So oikos, that means household, and nomos or nomia, that means management. It is basically about household management. Later, the Adam Smith, who is Adam Smith? The father of economics. He gave the book An Inquiry into the Nature and Causes of Wealth of Nation. In this book, he has iterated that what is actually economics is about. What exactly economics is about. That is given by Adam Smith in his 17th century. 17th century, that is 1776. So earlier it was till 17th century, not 19th century. I'm so sorry. Here it is not 19th century, it is 17th century. Till 17th century, it was known as political economy. Later it changed to business economics. That means it is not just, political economics to economics. It is not just about the politics, it is about the management of nations. That is given by our beloved Adam Smith. Later, who is the father of modern economics, sir? It is Alfred Marshall. Because many of the theories that you see in the economics are, uh, you know, uh, are redefined. Many of the theories are again given by Alfred Marshall. We can see that in the coming chapters that Alfred Marshall has given some of the theories, such as law of diminishing marginal utility, consumer surplus, not even that. When it comes to the modern economics or macroeconomics, may also he has given some of the theories. So that's why we call this person, legendary person, as father of modern economics. Father of economics is Adam Smith. Father of modern economics is Alfred Marshall. So why economics came? Because of two fundamental factors. Remember, human beings have unlimited wants. Our wants are unlimited. One after the other wants will pop up. At the same time, the resources, means resources. Means to satisfy these wants are relatively scarce from the subject matter of economics, which will form the subject matter of economics is human wants are unlimited and the resources to satisfy these wants are limited. So that's why we are going to study about economics, which states that how to allocate these resources, that is the scarce resources, to our uh, unlimited wants, so that we can satisfy our most pressing wants. Not all the wants can be satisfied. No, obviously not possible. All the wants we cannot satisfy. But what is most pressing want that we have to satisfy? So now, meaning of business economics. So economics is thus the study of how we work together to transfer scarce resources, scarce resources into the goods and services to satisfy the most of our infinite wants. We know that we cannot satisfy all our wants. Most of the infinite wants we have to satisfy by allocating the resources. So this is the subject matter why economics came. Again, who is the father of economics? Alfred Marshall. Who is the father of modern economics? Sorry, who is the father of economics? Adam Smith. Who is the father of modern economics? Alfred Marshall. And the third one is that the why economics came because of two fundamental facts. One is human beings, they have wants, unlimited wants, and the second one means to satisfy their wants are limited. Continued. Meaning of business economics. So business economics is problem of rational business decision making. That means in our day-to-day life, business, especially in business, we see that there are some problems. So which require some huge resources, but we cannot allocate that resources to that want. So why we cannot? Because we want that resources for some other purpose also. So that there comes a point where we have to make one business decision. And an important decisions that we have to make, whether to choose this action or to choose other action. For example, I say that you have got 1,000 profit, 1,000 profit in the sense 1,000 income. Now you have 1,000 resources, but at the same time you have so many wants to satisfy. Or in the business, you wish to invest. Sorry, you wish to invest somewhere. You wish to invest in your own business. These are two alternatives which are available. You wish to invest this 1,000 in some business, others business, in the share, or you wish to invest this 1,000 in your own business and take more income. Now these are the two alternatives. Now you have to choose between them. That is nothing but business decision making. No, selecting appropriate alternative at the right time to achieve the organizational goals. So this is about business economics. What is the decision making? How we call it as decision making? Because evaluation of feasible alternatives. You have many alternatives. As I said, you have 1,000. You have to put this in shares, or you want to invest in your own business. You have many alternatives. Rational judgment on the basic information. Rational judgment you have to do. You cannot invest blindly on some shares. Rational judgment you have to do. Nowadays, COVID is coming back. So because of which I cannot invest in some that kind of shares, which is example restaurant ka shares. No, it is not possible. Choice on available productive resources, land, labor, capital, organization, which are limited and can be employed in alternative uses. You have to choose which one to invest in. Therefore, more effective alternative must be chosen. Less effective alternatives must be rejected. You have to reject less feasible alternative. Most effective alternative we have to choose. So business economics is used for business decision making. Why we use business economics? To make that decision where to invest or where to put our resources. This is business economics. So which integrates economic theory with the business practices. So we know that what is economic theory, what is business. There is one gap between business economics and business and economics. So that gap is filled by this business economics. So the definition of business economics is given by many people. The business economics may be defined as use of economic analysis to make business decision involving best use of organizational resources that we have already discussed. Joel Dean. See, there are many people who have given the definition of business economics. I would say not required to remember all the definitions. You don't have to remember all the definitions. You just have to go through this. Okay. Why? Because they don't ask you right definition. No, they cannot. So Joel Dean defines business economics in terms of use of business economic analysis to form the business policies. You have to make one business policy. That means rules and regulations in your business. And you have to use some economic analysis. Economics is required to make some business policies. This is given by Joel Dean. This is what you have to keep in your mind. Okay, continue. So now we know that nature of business economics, where there are two important natures, microeconomics and macroeconomics. What is microeconomics? Study of economics by bits and pieces. Correct? Now we are studying about only about some part, that is microeconomics. See, it's study of behavior of individual decision-making units. So what are these, sir? Example, product pricing, consumer behavior, factor pricing, behavior of the firms. What are these, sir? Product pricing. You have produced one product, example, this mouse. How to price this? What price I have to put so that consumer will purchase this? Correct. Later, consumer behavior. See, if you increase the price, demand will decrease. Why, sir? That is the behavior, common behavior of the consumer. Even me and you, we do this, we take up these actions. If the price increases, we will decrease the demand. Factor pricing, factors of production. We will look at the factors of production. What is its price? Behavior of the firms, supply chapter. If the price increases, firms will increase their supply. So that is behavior of the firm. Location of the industry, where I have to situate or where I have to locate my industry. All these points are microeconomics. So we have to deal with this, and complete control is under in the hands of businessmen. Complete control is in the hands of businessmen. This is microeconomics. Okay. Next one, macroeconomics. What is macroeconomics? Where you don't have the control. Control is not in the hands of a businessman. In macroeconomics, we study the economic behavior of large aggregates such as overall conditions. See, national income and output, general price level, balance and price level, balance of payment, the price level, external value of money. What is the value of money? External value. What is external value? See, Indian rupee. Now, example, $1 is equal to how many units of our currency? So that is nothing but external value of money. Savings and investment, overall savings in India, employment and growth rate in India. This is about micro and macro. So microeconomics is talking about small aspects. Macroeconomics is talking about aggregates. It is talking in aggregate. Next one is nature of economics. We study that what are the basic characteristics of economics, especially business economics. So under this, we generally discuss whether economics is science or art or both. If it is science, whether it is positive science or normative science. Remember positive science and normative science. So first of all, economics is science or art. It is both, not just science. Science means what? So often question arise whether economics is science or an art. Economics is science. Why it is science? Because a systematic body of knowledge. There is one system you have to apply. Example now, law of demand. How you apply law of demand? So there is law of demand plus there are some assumptions to apply this law of demand. Correct? No, that is systematic body of knowledge. And answer should be measurable. If the price increases, demand decreases. Correct? No, we can measure that effect also. Answer should be predictable. We can easily predict that if I increase the price, demand will decrease. There should be tools to measure the answers. Correct? No, elasticity, price elasticity of demand, income elasticity of demand, all these things. And it should be universally acceptable. But economics is not universally acceptable. One point is missing in economics, that is, it is not universally acceptable. See, economics satisfy all about condition except universally acceptable. The end result in economics is not applicable for all circumstances. It will be subjective in nature. Example, demand for Audi car in India and America will not be same. But scientific outcomes such as H2O, in a sense, combining two atoms of hydrogen and one atom of oxygen will result in water in any part of the earth. Correct? No. Nowhere, no matter whether you are in India, you are in Africa, you are in Afghanistan, wherever you are, two atoms of hydrogen, one atom of oxygen will amount to water. But in India, Audi car is luxury. In US, Audi car is not luxury. Correct. Hence, economics not a pure science, it is partial science. It is not satisfying the last condition, universally acceptable. Next one, economics is an art. Art is nothing but practice of knowledge. So you have a knowledge, you practice it. That means you apply it. How you apply, that is art. Okay. Unlike science, which is theoretical, art is practical one. You have to apply that, only then you'll get to know. So this is about economics is a science and art. So I would say that thus economics is both science and an art. It is science in its methodology and art in its application. Now, if it is science, sir, then whether it is normative or positive science. What is positive science? Remember what is positive science? It will tell the facts of the case or cause and effect of the case. That is positive science. What is normative science? It will say what it should be. So what has happened, that is secondary to it. Normative science says what it should be and how it should be. So that is given in normative science. See, so it is the systematic body of knowledge which concerns what it is. But here is a systematic body of knowledge which concerns what it ought to be, how it should be. Correct? No, it is more talking about suggestions. It is giving some suggestions here. So in case of positive science, there is uniformity. Main objective is to establish uniformity, what it is. But here to establish ideals. Ideals in the sense some a systematic policy, a systematic rules and regulations will be set by normative science. So here it is called as descriptive science because it will describe. But here it is prescriptive science because it will suggest, it will give you the suggestions. It does not passes value judgments. Which one? Positive science will not pass value judgment. That means it will not judge anything. It will just say that what it is. But in case of normative science, it will pass some value judgments, how it should be. Some judgments are given in this. It is concerned with facts, but it is not concerned with facts. Which one? Normative science is not concerned with facts. Positive science is concerned with fact. It explains cause and effect relation. Positive science is explaining the causes and effect, but normative science, it suggests how things should be. Okay, so these are the cases here, positive and normative. Later, if we continue, what are the characteristics of business economics? It is pragmatic in approach. Pragmatic in the sense it is very practical one. Why? Because we have one business problem, we have to apply some solution. It is very much practical here. Interdisciplinary in nature. What is interdisciplinary in nature? That means it is connecting many other subjects. Economics is not isolated one. It is connecting with mathematics, statistics, and it is connecting with finance. It is connecting with the marketing, etc. So next one, incomplete elements. I don't think it is incomplete elements. It is integrated. Integrated. So that means, see, such as general price level, income and employment level, government policies, tax, interest rate, industries, etc. Everything is integrated here. Okay, it is not isolated one. It is integrated elements. Sorry, interrelated, not integrated, interrelated elements. Next one, based on microeconomics. Business economics is based on maximum what we study in business economics is based on microeconomics. Why, sir? Because business is micro, no? It's not macro. Business is micro. That's why it is absolutely based on microeconomics. But, sir, are we neglecting macroeconomics? No, dear. We are not neglecting macroeconomics. Some aspects of macroeconomics should be there, but large part of business economics is microeconomics. So these are the features of business economics. Once we are done with all these features, see what we discussed so far, what is economics, what is business economics, who is the father of economics, and who is the father of modern economics. Later, we discussed about why economics came into picture and what are the what is micro and macroeconomics and what are the the characteristics of business economics. Later, we discussed about what are the central economic problems. What are the problems in economics? There are 4 problems in economics. One is what to produce. That is talking about allocation of resources. I have some resources with this what products I can produce. This is what to produce. The second one is how to produce. Third one is for whom to produce. And the fourth one is what provision has to be done for future economic growth. See, first one, what to produce. That is about resources. How to produce. That is about what technique of production that we have to use, whether labor intensive or capital intensive. How to produce. For whom to produce. The third one is for whom to produce. That means in a nation, it is filled with some kind of people, such as middle class, rich class, or poor class. So now in India, if we talk about India, it is middle class people are more. So in that case, we have to produce some goods which are usable for middle class people. Okay. And last one, fourth one, what provision has to be done for future economic growth. So we are not just thinking about today's growth. So we have to think about some future economic growth. This future economic growth, by keeping this in mind, that is sustainable development. By keeping in this mind, how much we have to use today. So that we will be discussing here. Okay. Human wants are unlimited and productive resources are scarce, and economics without scarcity is not found in the real world. So all wants cannot be satisfied with scarce productive resources for the satisfaction of the want. So problem of use of resources arise, generally called as central economic problem. All these 4 problems has come because of the scarce resources that we have here. Scarce resources. So this is about the origin of problems. Now, what are the problems? See. So basically central problems, that is scarcity of resources. Central economic problem is because of 2 reasons. One is unlimited wants and resources are limited. Resources have alternative uses. Allocation of resources, that is also difficult. How do we do this? What to produce, how to produce, for whom to produce, and what provision should be made for future economic growth. So we'll discuss all this one by one. What to produce. See, I told you that I have some resources. Kahan use karna hai isko? Kahan dalna hai isko? So that is what to produce. If the question arises, what goods are to be produced, such as durable goods or perishable, single use, multiple use, superior or inferior goods, It is also known as problem of choice making. We discussed about this, correct? That is what to produce. Which kind of goods I have to produce now? The second one is how to produce. How I have to produce this product with the labor intensive technique or capital intensive technique. We know that India is labor rich country. So we usually go for labor rich or labor intensive technique. Why? Because we get labor at the cheap rate. Cheap rate labors are available. That's why we go for labor intensive technique. But the country like US, so their population is also less, and at the same time, the education level of that those people are very high. So that they go for capital intensive, because in labor intensive, no, in case of labor intensive technique, the cost will be very high to them. They get cheap capital. Machineries are available at cheap rate. So why don't they think that why don't we go for capital intensive technique? So this is about how to produce. Next one is for whom to produce. It will determine the distribution of goods amongst the various individuals, like class of the society, targeted customers might be their ability to purchase. Correct? No, I told you about India is full of middle class people. Their ability is moderate, not very high or not very less, moderate ability. If you put some reasonable price, they will purchase. If the price is very high, they think it is not affordable to them. If the price is very less, they think that it is cheap goods. So that's why you have to keep a reasonable price. So that's why we have to think which kind of people are there in our society. So this is for whom to produce, and what provision should be made for economic growth. A society would not like to use all its scarce resources for current consumption. It always looks at the sustainable development. If we use everything for now, what do we do in the future? Future economic growth, that will reduce, no? We have to keep some resources for our future generation also. That's why the government says, don't use everything now. So we have to use some resources for future economic growth. So this is about the central economic problems. Later, we discussed about the economic system. We know that there are three types of economy. One is capitalist economy, the second one is socialist economy, and the third one is mixed economy. So we will discuss the economies of whole world is divided into three categories: capitalist, socialist, and mixed economy. First one, capitalism. Capitalist economy is a political economic system based on private property and private profit. This type of system is also called laissez-faire or free market economy. Very important one, people. Please do remember that the other names for capitalist economy, which is laissez-faire and or free market economy or private economy as well. Capitalist is a capitalist economy. That means, what are the features of this capitalist economy? First one is the resources are owned by the private people, not by the government. Government has very minimal role here. See, first feature says that private ownership of the property. That means any product or any resources that we have, the owner is a private person, not by government. Government is not holding any ownership here. It is in the hands of private people. Freedom of enterprise. Next one. What is freedom of enterprise? So if you are the owner of that resources, you can start any business that you want. You can easily start any business that you want. You don't have to ask permission with the government. You have the freedom of enterprise. Government interference is zero in starting your business. But once you start the business, some kind of uh, rules will be there on your company or in your business. That means you cannot do the pollution, or you cannot do some anti-profiteering activities. You cannot smuggle. All these things are some of the important rules and regulations which are put on you by the government. That is freedom of enterprise. Freedom of enterprise is there, but 99% you are free to do the business. But 1% interference will be there by the government, that you should not do any harmful activities, or you should not harm the sentiments, or you should not harm the uh, public what do we say, public peace. That is important one. Profit motive production. Remember this, any activity which is done by the people in capitalist economy, that is for the purpose of making some Profit, money. So if there is no profit, they don't start that business. Usually, if you ask me, even in my case, if I don't get any profit, I don't start that business. So this is called as profit motive of production. Next one, existence of competition between the producers. Why? Because we know that the interference of government is very less. So government is putting very less restriction so that I can start any business. That means my competitor also can start the same business. So that if he starts the business and even I have a business, in these two cases, there is one competition between me and that person. No. So it encourages the competition. Sir, if you ask me, sir, competition is good for the business or the society? Yes, competition is very good for the society. Why it is good for society? Because a new kind of goods or a better goods and services are given to the public so that it will increase the welfare in the society. This is profit motive of production. Next one, existence of competition between the product producer, that also we discussed right now. Just now, the consumer sovereignty is not restricted. That means consumer is the king here. If he wants some goods, that has to be given by the person. I mean, if if a consumers want some goods, basically the producer will concentrate on their want, not on profit. Why? Because if there are consumers, only then there is business. So this is about consumer sovereignty. That means consumer is the king here. He is free to spend on any goods. There are anyhow, we discussed here that there is competition between the producers. If there is competition between the producers and the customer is also looking for good product, then customer is free to spend his money on either my goods or his goods, my competitor's goods. This is existence of competition and sovereignty. Consumer sovereignty is not restricted. Consumer is free. 1 second, people. Welcome back. I'm so sorry. My health is not, it's not supporting me nowadays. Huh? Okay. Next feature is that unequal distribution of income. What is unequal distribution of income? There is, this is one a kind of disadvantage in case of capitalist economy. So we know that the one who has money, he goes on building some business. He will do one business and he earns more income. So rich will become more rich. There is wide gap between the rich and poor. The one who is rich, his income will be in lakhs or it might be in crores. The one who is poor, his income might be in thousands or in lakhs. Per annum, his income might be 3 lakhs, 4 lakhs or 5 lakhs. But the income of the rich per annum, it will be in crores. So that is wide gap between uh, the rich and the poor. This unequal distribution of income that will be increased in the capitalist economy. So now what are the merits, sir? What are the advantages of this capitalist economy? It encourages economic activities. Correct? No, there is good competition. That means it will encourage the people to produce good products at the standard or reasonable price. Next one, maximum efficiency. Again, the reason is same. In case of maximum efficiency, if there is maximum efficiency, how this maximum efficiency will come? Because of competition. So I wish to produce some product which should be very good compared to, which should be better compared to the competitor, so that I will use my efficiency. Dynamic economy. So if it is capitalist economy, dynamic economy, because I will produce one goods and advanced goods will be produced by my competitor. If he produces advanced product, then I will produce something which is better than that product. No, getting this? So this is why maximum efficiency plus dynamic economy. Economy keeps changing because of this technology. Rapid economic growth, again the same reason. The growth of economy because of competition. Next one, demerits of capitalist economy. Main demerits are unequal distribution of income that we just discussed. Rich will become more rich and poor will remain to be a poor. Business instability. That means you have upgraded your business to one technology. The technology keeps changing, no? If that keeps changing, business is not stable. Business also keeps changing. Consumer exploitation. High chance that a person or a businessman will sell something which is not so good item. He might sell something which is not the good item here. So that's why consumer exploitation will be more. He just exploits. Misallocation of productive resources. So in case of capitalist economy, to get more profit, no, we will produce that product which is actually not required for the economy. Rich products will be produced in anticipation of more profit. That's why this is not the merit. This is demerit. Next one, socialist economy. Dead opposite of capitalist economy. In capitalist economy, private enterprises, they are the owner. They had some complete control over this. But in case of socialist economy is planned or command economy, which is based on the ownership of the property and social welfare motive, not profit motive. Prices are determined by central planning authority. Some of the socialist countries are Hungary, Poland, Yugoslavia, Bulgaria. All these things are, all these countries are some socialist economy examples, but I don't completely agree with this. I don't completely agree. Might be some features of socialist economy might be there. What is socialist economy, sir? Government is taking power over that economy. What to produce, how to produce, for whom to produce, everything is decided by the government. So what are the main features here? Public ownership of property or factors of production. That means government is the owner. It is not the private people who are the owner. It is government who is the owner of the most of the factors of production. Okay. So later, the next one is no freedom of enterprises. That means you cannot start the business that you want. You cannot start the business that you want. Now, government says that you have to produce or you have to start some businesses. Only that business you have to start. So complete role of the government. Government is taking complete, what do we say? Complete control over your business. Private enterprises should only follow what CPA instructs. So they cannot decide on their own. The right to private property is limited as all the properties of the country is owned by the state. Very important one. No freedom. See, the owner is government, no? Then whatever government says that you have to follow. Correct. There is no freedom of enterprise. Next one, social welfare motive. See, remember in capitalist economy, there was profit motive, but here it is social welfare motive. Social welfare becomes the guiding light in such a system. Since all the enterprises are state owned, no individual or private profit accrues. So there is no profit. We will not be giving any importance for profit. It is social welfare. That is what important there. Next one is planning mechanism guides production. Planning mechanism means government will guide production, what to produce, how to produce, for whom to produce. All these are production related. So in that case, government will guide what you have to produce, how you have to produce, for whom you have to produce, everything. All the plans are done by the government. The highest authority is government here. And there is no competition. Why there is no competition, sir? Because see, everything is owned by the government. Whatever the work I am doing here, that is on the basis of instruction by the government. If the government is giving all these instructions, then why will I compete with my other person, that colleague? I don't compete. Non compete madodilla. Why there is no competition? Because the government is deciding anything. I cannot do anything on my own. There is no competition in socialist economy. At the same time, absence of consumer sovereignty. That means consumer is not the king. Government is the king. Whatever produced by government, that will be taken by the consumers. Okay, so the absence of consumer sovereignty. That is very a very important one. Next one, restriction on freedom of occupation. You cannot start your business on your own. Any occupation, government has to give the some instruction. See, the right to work is guaranteed, but the choice of occupation get restricted because these are determined by some authority. That means government will determine what you have to do, what business you have to do, how you have to do the business. Everything is determined by the government. Equal distribution of income. A relative equality of income will be there. Why? Because government is doing all the activities, no? So that they know how to tax you, what kind of tax will be put on you, and you have to pay the tax, and that tax amount will be given to those who are very poor. Like this. This is equal distribution of income will be there in case of a socialist economy. What are the merits of socialist economy? Optimum utilization of resources. Why? Because everything is decided by the governments. Satisfaction of consumers' need. Why? Because government knows what are the needs of the people. Next one, equal distribution of income and wealth. Remember, this was the demerit of capitalist economy. Rich will become more rich. But here it is given that merits of socialist economy, the income and wealth will be distributed by the government. No, that's why it is equal distribution. Next one is demerit of socialist economy, inaccurate calculation of cost. The cost which is calculated, no, that is not accurate one. It is inaccurate. Why, sir? Because the government is not giving more importance to the cost. Government is giving more importance to the public welfare. So that is inaccurate costing. So that government will go into loss. Okay. Bureaucratic setup. What is bureaucratic setup? Not autocratic, bureaucratic. So that means, for example, the government is dual government here. Central government and state government, like this. So there is bureaucratic setup that might be there. Plus, concentration of power in government's hand. Government is the ultimate distributor of the resources, and at the same time, any decisions will be taken by the government. So that means I don't have any powers here. I have resources, I have some good idea, but government is restricting me from using that idea. So these are demerits of socialist economy. And last one, which is mixed economy. What is mixed economy? It is a blend of socialist and capitalist economy. Main features are ownership in properties, both private and public sector. Some resources are there in the hands of private, some resources are in the public. And it is planned economy too. Some of the sectors are very much planned. Example, atomic sector, railways, and defense. All these are purely planned, and some of them are not purely planned. And we can say that mixed economy is planned economy to some extent. Why? Because in India also, think that you have good resources. That means if your income is more, then tax is also high. Correct? No. So this is called as progressive taxation. This will be done by the economy, which is planned economy too. Okay. So in case of mixed economy. Next one, balanced regional development. Why? Because in some cases, see example, now the banks are not there in regional area. Rural area, there is no banks. What the government will do? Government will start one banking branch in that in that area, even though it is loss-making branch. Why? Because government wants to give some facility to these guys. Okay, so that is balanced regional growth. So they always look at balanced regional growth. Where privates are not there, there they'll give importance for public. Balanced regional development. Next one, a dual system of pricing exists. So what is dual system of pricing? So in case of example, like diesel, see, so in India, prices of essential commodities like diesel, LPG are fixed by the government. For some product which is fixed by the private, example, mobile phones, laptop, or anything for that matter, food items, that will be decided by the private. Some of them are decided by the public, that is government, and some of them are decided by the private. That is dual system of pricing exists. There is freedom of enterprises in some sector, but no freedom in public sector. I have the freedom, so that can I start manufacturing of bombs, grenades? No, not possible. Okay. Next one. Private sector producers, with the profit motive and public sectors with welfare motive. So both the sectors are there. Defense is with welfare motive. But the private hoteliers, example, or the this manufacturers of some items, such as infrastructural items, plywoods, tiles, all these things. So in that case, private sector, they have more power. Competition exists, but limited to the private sector. In public sector, there is no competition. In private sector, there can be competition. Consumer sovereignty exists. That means consumer is the king. In some cases, consumer is the king. Consumer sovereignty exists here. Freedom of occupation also exists. Freedom of occupation. That means you can start any business, but not in the public sector. Sir, I will start a business. My business is police station business, sir. No, you cannot do that, because that is purely public sector. Police station business, sir. Police station business, and I'll put some uniform, just like police, and I'll start stopping the vehicles and collect the fees. No, this cannot be done. So this is purely meant for public. What are the merits of mixed economy? Mixed economy resources, mixed economy secures the merit of both capitalism and socialism. Socialist economy, capitalist economy, both merits you can put it together here. Okay. Mixed economy protects the individual freedom of person. So that individual freedom, that will be protected here. At the same time, price mechanism is allowed to operate under mixed economy. A price mechanism, that means for some sector, no, basically private sector ke liye, you can price mechanism, you can support the price mechanism there. Reducing the inequalities. What is inequalities? In case of rich and poor, there is a wide gap between rich and poor. But in case of mixed economy, like in India, government is putting some restrictions. There is progressive taxation. If your income is more, tax is more. The collected tax by the government will give it to what? Government will give this to the poor. Okay, so this is about price mechanism and reducing the inequality. Economic fluctuations can be avoided because government has some control, no? So that they can fluctuate. The fluctuations in the economy, wide fluctuations in the economies can be avoided by the government. Mixed economy helps underdeveloped countries to have rapid and balanced economic development. Why? Because balanced development, not just rich. Even poor ka case, they will give some subsidy or they give some monetary incentives, and that will increase. So here the what do we say? The balanced growth that will happen, so that government gives more importance for the poorly developed sectors too. These are the merits. What are the demerits? Mixed economy is difficult to operate because we have to divide private sector and public sector. Very difficult to operate. And excessive controls and heavy taxes are likely to prevail under mixed economy. Heavy taxes in India, to the maximum of 40% tax is also there. 40%, not 40%. See, 30% is the maximum tax slab. On that, cess will be there, and plus this one, surcharge. If your income is more than some amount, if your income is in crores, Then surcharge is also there. Tax on tax it is. So it might go till 40%, 40, 42, 43% somewhere. Next one, excessive controls and heavy taxes are likely to prevail. Last one, mixed economies is described as by some Peter as capitalism in the oxygen tent. Correct. Now, capitalism which is there in oxygen tent. That means a hybrid structure it is. According to him, it is only a trick of capitalists to cheat the working class by offering them some temporary advantages like social security, uplift of the depressed classes, etc. Some ideas. Just what is the idea? Uplifting. So it is to cheat the working class by uplifting them some temporary advantage like social security. It is given by Shampeter, not by me. So our health are what they say that Shampeter says that this is the idea of the government just to give some incentives for temporary. Later they will take out that advantages. So these are some of the things that we need to know about the first chapter, that is economics. So what we have discussed in this economics, business economics ka chapter, what is economics, what is business economics, what are the features of business economics, plus what are the problems that might arise in the economy, and importantly, the system, economy system, what are the features, what are the merits, and what are the demerits. That we have discussed in this chapter. And finally, lastly, you have one big table. In this table, which is given that what are the features and specifically about example ownership of the property. In capitalism, it is private ownership. In socialism, it is public ownership, but in mixed economy, both public and private ownership, both will be there. Like this, they have given some features. I'll give you 2-3 minutes. You can see that on the screen. Just to go through this once, and I'll be back in 2 minutes. Okay, I'll drink some water and I'll be back in 2 minutes. Please do read that. I'll be back. Yes, welcome back. So now that was about chapter 1, first chapter. Now the important one is chapter 2, unit 1, that is demand. So there are 3 units in chapter 2. So we have to discuss about 3 units here. In that, basically, first unit is about demand, and the second unit is about the second unit is about the behavior, the consumer behavior, And the third unit is about supply. Okay. First unit is demand. Second unit is about theory of consumer behavior. And third unit is all about supply. So if we study demand ka chapter, no, in that case, supply will be bit easier one. So that chapter 2, unit 1, demand, that we will study first, and later we directly go to unit 3. So that is what we have done in our class also. Trisha classes may. My students know that. First we will do the demand chapter, later we'll go to supply chapter. I mean, chapter 2 ka unit 1, demand, and unit 3, supply. Now demand constitutes 3. Remember DOS ka story? DAW. 3 important elements will constitute demand. That means you should have a desire plus ability to pay for it and willingness to pay for it. If these 3 conditions are satisfied, then we can call it as, in common parlance, there is demand. In economics, there is demand only if these 3 conditions are satisfied. That means you should have a desire to purchase something. At the same time, you should have the ability to buy, ability to pay for it. That means vitamin M should be there in your pocket. M means money. Vitamin money should be there in your pocket. Only then you can purchase that. That will be considered as demand. And the third one is willingness to spend. That means you have money, but you are jugga. Jugga in the sense of conduce. Okay. So in that case, you cannot call it as the demand. Any commodity at a given point of time for a given price, if the consumer is ready to purchase it, that constitutes the demand. That means you should have the desire and you are ready to purchase it. You have the money also. Only then it is demand. Or desire backed by purchasing capacity with willingness to spend on it. Only then it is demand. That means basically everything is talking about these 3 cases. Okay. Now, what are the determinants of demand? Remember, what are the determinants? A CPT is CPT. Correct? No. First, price. Price and demand has negative relationship. Thumb rule of demand unit. The main thumb rule is that price increases, demand decreases. Price decreases, demand increases. Remember? I'm so sorry. Undo kahan hai? No. I have to erase it. Yeah. Okay. Yeah. So the price and demand has negative relationship. If the price increases, demand decreases. If the price decreases, demand increases. We know that. For example, to this bottle, the price is 100 rupees. I purchase 5 units. If the price is 200 rupees, I don't purchase 5 units. I purchase 2 units. 2 units of bottles because price has increased. This is the thumb rule. So there is negative relationship between price and demand. The relationship between price and demand is expressed in mathematical equation known as D is equal to F of P. That is, demand is equal to function of price, which is independent here. Price is independent and demand is dependent. See, direct relationship. Price increases, demand increases. This is not there in, if the price is independent, then price increases, demand has to decrease. This one. If price increases, demand has to decrease. In case price is independent. What if price is dependent? That means, sir, for these kind of bottles, demand is increasing a lot. Being the supplier, what do? I will increase the price. Price also increases, no? Demand increase आपता है इधर. So demand ऊपर जा रहा है, sir. See, the price of demand for the product, the many more number of customers are purchasing this product. In that case, मैं क्या करूं? Being the supplier, उसका दाम बढ़ा दूंगा मैं. That means I will increase the price of this. Correct? No. So this is direct relationship where demand is independent, price is dependent. What if ulta, sir? Price is independent, demand is dependent. Price is increasing, sir. Automatically, price is increasing. Demand start decreasing. So this is The first determinant, that is price. Now the second one, income. We know that if my income increases, I get more money to spend, no? So that demand also increases. That is given here. Income increases, demand also increases. If income decreases, that means the money which I have is very less. So in that case, demand, I start reducing my demand. I don't increase the demand, instead bulky, I'll reduce my demand. So this is income ka condition. Next one, in case of tax, remember what is tax? Personal tax, income tax. If your income is 10,000 and the tax is 10%, you have to pay 1,000 to the government. 9,000 will be there with you, correct? No. If your income is 10,000 and the tax is 10%, 10,000 minus 10% of 10,000, that is 1,000. You will be, what will be there in your hand? 9,000 rupees. You have 9,000, which is there in your hand. This 9,000 kya kuru, sir? I'll spend it. What if my tax increases? Tax rate increase to 20%. Income being same. My income is 10,000. Tax rate is 20% now. 20% I have to deduct. 20% I have to pay to the government. That means 2,000 rupees I have to pay to the government. In that case, what has happened to my income? From 10,000, it decreased to 8,000. Last time it was 9,000. After deducting tax, it was 9,000. Now, after deducting tax, it is 8,000. That means my income got decreased. Because of increase in tax, my income got decreased. If my income decreases, what happens to demand? Demand will decrease. So that, can I say that if tax rate increases, demand decreases? Yes, sir. So that is given here. Tax and demand has negative relationship. So it is not given here. Better we remember that the tax and demand has negative relationship. Next one is climatic condition. So summer, winter, and rainy season. It depending upon the climatic condition, demand for particular commodity varies. For example, now in case of mango milkshake, no, we usually drink it only during summer season. Why? Because mango, it is the summer is the season for mango. If we eat mangoes in rainy season, no, that will definitely upset our stomach. Stomach upset agate. So that demand for mango will be very less. Demand for mango will be very less during the rainy season, because we don't eat it, that will upset our stomach. Even jackfruit, we don't eat it during rainy season, because there is high chance that your stomach will get upset for 2-3 days. So that's why off season may the goods, some of the goods are not meant for off season. Please don't consume that. Okay, that is climatic condition. Next one, advertisement. That is also one the condition. So the advertisement is one effective tool through which we can advertise the product. That means we can communicate what goods we have to the people there. That is advertisement. So advertisement has positive relationship with demand. Correct? Now, if advertisement increases, demand also increases. If advertisement decreases, demand decreases. Taste and preference of the consumer. Taste and preferences here. So in case taste of the consumer changes. So earlier we used to purchase plastic water bottles. Now our taste has changed to steel water bottle. Why steel water bottle, sir? Because some health benefits are also there. Because if you store water in plastic water bottles, that might harm our health. And people say that nowadays people are telling that it will increase the possibility of cancer. So that's why we will change our preference or taste. In that case, the demand for plastic water bottle has decreased, but demand for the steel water bottle will increase. So that is taste and preference. Okay. So it can be because of snob effect or Veblen's effect. So what is snob appeal? Instead of snob, we can use it as bandwagons effect. See, if nowadays smart watches are so common, everyone, all are using smart watches. When smart watch is so common that the people also, now, if I am planning to purchase one watch, I'll go for smart watch. That is bandwagons effect. There is something called as Veblen effect. What is Veblen effect? No one uses that product, and I have a desire that I have to use that product. That is Veblen effect. So that bandwagon effect is different from Veblen effect. Okay. Next one is population. If population increases, then demand also increases. Correct? No, because there are more hands to purchase that product. So that if population increases, demand also increases. When the population of a nation is more, even the demanding capacity will be more, and vice versa. Demand can be based on age group, class of society, religion, industry, etc. So these are population wise. So now what kind of population? What is their mindset? So that there it will base. This is population. Next one, complementary and substitute goods. Complementary goods are those goods which are consumed together. Example, bike and petrol. Correct? No. In that case, if the price of bike increases, demand for petrol will decreases. Why demand for petrol decreases? Because no one is purchasing bike. If you don't purchase bike, where you put the petrol? Correct? No. So complementary goods there is negative relationship. But in case of substitute goods, there is positive relationship. Example, electric bike and petrol bike. The price of petrol bike increased, then people will reduce the demand for petrol bike and they will shift to electric bike. The demand for electric bike will increase. So this is complementary and substitute goods. In case of complementary goods, there is negative relation. But in case of substitute goods, there is a positive relation. Keep this in mind. Next one. So demand function. What is demand function? D is equal to F of P, but it is demand and price ka function. Demand function is given here. See, D is equal D of X. That means demand for product X is equal to function of price of product X, or might be because of some other factors, price of product Y, or price of consumer goods. Price of substitute and complementary goods, taste and preference, advertisement, etc. See, the explanation is given here. M is money income. So the shortcut to remember the determinants that is given here, pit cat PCs. But I say that what is our shortcut? A CPT is CPT. Correct? No. C P T. T is I for income, S for substitute goods. Substitutes is C. Complementary goods, C. P for population, T for taste, A for advertisement. So this is the shortcut to remember the determinants of demand. Okay, so this is about demand concept. Now, some of the important theories in demand, so that we have to discuss. The first one is law of demand. Yes, Kritika ji, CPT, very good. So in this case, now the next one, law of demand. What is law of demand? Remember what is law of demand? CP minus, correct? No, CP minus. What is CP minus? Ceteris paribus, there is negative relationship between price and demand. Ceteris paribus, that is, keeping all other things constant, there is negative relationship between price and demand. So law of demand is basically explaining about the relation between the price and demand. So in a sense, in CPT, only P, the price is variable factor, and all other things you have to keep it constant. See, all things remaining constant. See, law of demand tells us only about direction of change, correct? No. What change? See, if the price increases, demand decreases. Decrease is the direction of the change. What happens to demand? What is the direction of demand that is given? But quantity, how much it decreases, that is not given by law of demand. That is given by elasticity of demand. We will discuss about that elasticity soon in today's class. Okay. So now that is law of demand. Law of demand says there is negative relationship between price and demand. Okay, that is law of demand. Now, in case of law of demand, there are some exceptions to the law. See, what is law says? If the price increases, demand decreases. Correct? No. This is given by law. If the price increases, demand decreases. But what exception says? If price increases, demand increases. Or if price increases, demand will not decrease. In that, the first exception is conspicuous consumption or conspicuous consumption. What is conspicuous consumption? That is nothing but Veblen effect. So, for example, the price of rich items, the which are used by the rich people. If the price of that product decreases, no one will purchase that. Or the demand for that product also decreases. Example, Audi car, Benz car. If the price of that product decreases, then rich people don't purchase that product. That is conspicuous consumption ka effect. See, usually what has to happen? Price decreases, demand has to increase. No, but rich product, example, Rolls-Royce car. The price is 6 crores, example. Price is 6 crores. It has decreased to 5 crores. From 6 crore, if it decreases to 5 crores, do you think I can purchase that? In future, I might. Okay. But right now, I cannot purchase. You can purchase it. Right now, you cannot. But in future, I'm sure that you will purchase it. Okay. Because you have that capacity. Students, see, the one who can get up early in the morning at 6:30 and listen to theory class, that means you definitely have that capacity to clear this and do anything in your life. I'm sure about this. So if you have the capacity to get up at 5:30 or 6 o'clock and get ready to listen to a theory class in the morning at 6:30 to 8:30, then I am sure that you have the capacity to do anything in your life. Because how many students are there here? Somewhere 26 to 27 students are live. Now it is increasing. There are some, not 26 students. How many are live? I don't know. I cannot make out. I can see that some of the students are putting your comments here. Very good that you are putting the comments. Anil is asking me, how are you, sir? I am good, Anil. Thank you for asking. I'm sure that you guys are good. Doing good. See here, what I was telling you that it is not easy to become a chartered accountant. Correct? No. You are doing that. See how you are doing with dedication. Look at you. There are some students who are online and they are listening to the class, and there are many students who think that anyhow we will get the video later on in the Trisha Classes this YouTube channel. So they might watch that later. But that is postponed now. Success is postponed. Success is delayed. But the students who are online, they are I believe that they don't want to miss an opportunity. That they will use this 2 hours in that matter. So in such a way that next 2 hours, no, which other students are sleeping at this time, and they will be studying it later. Later 2 hours is gone. No. Now you have used it 6:30 to 8:30. You have used this 2 hours in such a way that so you can use next 2 hours for some other subject. So that means you are one step ahead compared to others. So that I say, your capacity is something different, people. I definitely vouch it and I definitely appreciate that. You definitely have that capacity. Okay, anyway. Rolls-Royce in future, definitely, I am sure that you can purchase it because you have that capacity. Okay. So if the price right now, if the price decreases from 6 crore to 5 crores, definitely I cannot purchase because it is costly. But the rich, ultra rich people who were planning to purchase that car, 6 crore ka car. Now, if it reduces to 5 crores, then definitely they'll get demotivated. No, they'll purchase some other car, not Rolls-Royce, Lamborghini or something. Correct? No. Okay. So this is conspicuous consumption or conspicuous necessaries. Next one, Giffen goods ka case. What is Giffen goods? Sir Robert Giffen has observed that in UK, England, what has happened ki the price of bread is increasing, but still the demand for bread is increasing. Why, sir? Because it is inferior goods. Inferior goods ka case compared to superior goods. In case of inferior goods, if the price increases, then the people stop purchasing the superior goods and they will start increasing the purchase of inferior goods. This is called as Giffen goods. Example, Puma and Poma. Puma and Upma. Correct. No. Now, normal rice and biryani rice. That is, these are the examples. Normal rice is Giffen goods. Biryani rice is superior goods. So if the price of normal rice is increasing compared to superior goods as biryani rice. So this is about given goods ka case. So now people purchase normal rice more, not biryani rice. Okay. So this is one more exception to the law. At the same time, conspicuous necessaries. Example, TV, washing machine. Even if the price increases, people want that product. Why? Because it has become necessary. Even though it is luxury, it has become necessary. Next one, expectation about the future changes. Now the example gold. You know what is the rate of gold now? Somewhere 1 month back, exactly 1 month back, we met in the classroom. Many of us, like my students who are there in this classroom now. So we met exactly 1 month back. So there we discussed about this future expectation. There I have given you the example of gold. There the price was 5,600, 5,400. Now the price is 5,800. 400 rupees has increased. Now where? Yeah, somewhere Ramsagar, you are right. Somewhere 6,000, it will approach 6,000. It is approaching 6,000. I am sure that in next 2-3 months, it will go to 6,000 rupees. And I told you somewhere, my old students, you know this. 4 months, 5 months back, I purchased some gold at the rate of 5,000. Now it is 6,000. People, 1 second, I'll be back. I'm so sorry. I'm very sorry. My health, no. Okay. So I have some health issues. Okay. Expectation about the future. My old student know that we have discussed that I purchased gold for 5,000 rupees by then. Not so. I mean, long back it is. It is somewhere 5 to 6 months back. I purchased it for 5,000. Now the value is somewhere 6,000 rupees. That means 20% increase has happened here. So that I say if the price decreases, no, or if the price is at this point of time, the price is somewhere 6,000 rupees. In next 1 or 2 year, it might go to 7,000, 8,000 rupees also. So in expecting that in future it will increase. Now I'll purchase it right now. I'll purchase it even the price is high. This is about one more exception. At the same time, emergencies. I don't look at the price. I want the product. Even the price is more, I will purchase that. Speculation activities such as buying and selling is my business. If the price is less, if the price is more, if the price is increasing, I'll purchase it so that in future I can purchase it, I can sell it at high price. And the basic necessaries for life. Example, cooking, gas, food, etc. All these are some of the examples of basic necessaries. In case of basic necessary also, I have to purchase this without any what to say, without any other options. If the price is more, can I skip eating? No, it is not possible. And in case of tone jeans and trends and changes, trends, the trend is changing. Even the price is high, I'll purchase that product. Why? Because that is the trend now. I should be there in the trend, no? So these are some of the exceptions to law of demand. Next one is demand and demand curve. People, fast. What is demand schedule and demand curve? What is schedule? Tabular representation. Remember, schedule is tabular representation. Demand schedule is tabular representation of demand. Individual demand schedule, tabular representation of demand of individual customer. That is individual demand schedule. What is curve? Graphical representation. What is demand curve? Graphical representation of demand. What is individual demand curve? Graphical representation of individual demand or a one person's demand. Graphical representation of a person, single person's demand, that is demand curve. Now here you can see that total demand. What is total demand? Nothing but market demand. So there is Batman, there is Superman, there is Iron Man. And you can see that the price is decreasing and the demand, look at the demand 55, 65, 75, 85, 95. Batman 22, 27, 30, 32, 35. That is also increasing. Superman's purchase is also increasing. Iron Man's purchase is also increasing. So when the price increases, demand decreases. Here the price is decreasing, so that price is decreasing, so that demand is increasing. So there is negative relationship. Just now we discussed about individual demand schedule and market demand schedule. कोई दिक्कत है? नहीं sir. Next one, demand curve. You can see that, negative slope of this demand curve. Demand curve is, there is negative slope. Individual demand schedule it is. And you can see that market demand schedule, they have not separately shown it. Why? Because individual demand curve or market demand curve, both will have the same shape. What is the shape of demand curve? Usually it is negatively sloped. Why it is negatively sloped? Because there is negative relation between demand and price. Next one. Demand curve is downward sloping. Why it is downward sloping, sir? Remember India versus Sri Lanka. India versus Sri Lanka. Income effect. If your income is stable, 100 rupees, price is decreasing so that you can purchase more from this 100 rupees. This is income effect. So again, so sir, my price, my income is 100 rupees. The income that I have is 100 rupees and the price from 30 rupees. See, earlier it was 100 rupees per product. I could purchase only one. Now, if it decreases to 50 rupees, I can purchase two products. If it again decreases to 25 rupees, I can purchase four products. If it decreases to 10 rupees, I can purchase. See, income is constant here. So that is called as income effect. N, new consumer. So just now we discussed about income effect. IND, India versus Sri Lanka. N, new consumers. If the price decreases, no, then new consumer will purchase that product. So they will enter the market by purchasing that product. That's why demand will increase. And D, different users, alternative users, multiple users. If the product has multiple use, then the price decreased. In that case, demand will increase. So this is in case of multiple users. Next one, Sri Lanka, SL, S for substitution effect. See, if the price of product A decreases, those who are purchasing product B, they will reduce the demand for product B and they will substitute to product A, so that demand for product A increases. This is substitution effect. LDMU, law of diminishing marginal utility. What LDMU says? Law of diminishing marginal utility says that if you purchase more and more of one item, then the utility that you derive or satisfaction that you derive from that product decreases. If the utility from that product decreases, will you purchase more? Will you pay more for that product? No, we will pay less for that product. So when the demand increases, price decreases. So here you purchase more and more only if the price is less. Why? Because marginal utility is decreasing. You are not ready to purchase more at the less price. More price. You are ready to purchase more at the less price. This is about law of demand ka concept. Now the next one is elasticity of demand. What is elasticity? responsiveness, that is elasticity or flexibility. What is elasticity of demand? Responsiveness of demand to change in the uh, price, that is elasticity. Sorry, responsiveness of demand to change in the factor, that is elasticity. There are many kinds of elasticity. Remember, price elasticity, income elasticity, cross elasticity, advertisement elasticity. What is price elasticity? Responsiveness of demand to change in price. Correct? No. Price elasticity. So it will tell us about quantitative statement. It is a quantitative statement. So first one is price elasticity, responsiveness of demand to change in price. Remember this formula? Percentage change. Delta means, this is delta. Delta means percentage change in quantity demanded divided by percentage change in price. That is delta. Change in quantity demanded divided by change in price. So difference between law of demand and elasticity of demand. So law of demand, it only represents the direction, but elasticity of demand, it is numerical percentage. It will measure it. Quantitative, it is qualitative statement. It just tells the quality. But elasticity of demand is quantitative statement. It will tell the quantity of change. That is difference between law of demand and elasticity of demand. Now, what is price elasticity of demand? Responsiveness of change in quantity demanded due to change in price of the commodity, which we have discussed already. Percentage change in quantity demanded divided by percentage change in price. Remember, if the percentage change in demand, quantity demanded is more than change in price. Quantity demanded has changed more to change in price. That means numerator is greater than denominator. Obviously, answer is greater than 1. If the quantity demanded change to the extent of 50% and price change to the extent of 25%. In that case, 50% divided by 25%. So the answer is 2, which is greater than 1, which we call it as relatively elastic. What is the shape of the curve, sir? Remember, it is flatter demand curve. See here, the demand curve is flat. Correct, no? Okay. If you look at this, the demand curve is flat here. So this is called as relatively elastic. If you compare this with relatively inelastic, look at this, the demand curve is steep here. Why it is steep? Because numerator is smaller than denominator. Answer is less than 1. E is less than 1. So the large change in price leads to a very small change in quantity demanded. This is relatively inelastic. Next one. See, can you see that? There is one question. Can you answer this question? What is the answer here? Percentage change in price, 10 to 15. What is the change? Change in price is 50%. Correct? No. Change in quantity. From 100, it has become 160. That is 60. 60 divided by 50. This is 50%. And this is 60%. 60 divided by 50. Answer. Huh. I'm so sorry. I'm getting some comments here. Okay, correct. 1.2. So the answer is 1.2, which is greater than 1. So it is price elasticity. So price elasticity is relatively elastic. Next one here. If you see this this question, price decreased by 50%. Price decreased by 50%, but quantity increased by only 20%. 20 divided by 50. Answer is 40%. 20 divided by 50. Answer is 40%. Correct? No? Yes. Dhanushji, you are right. So it is less than 1. So that elasticity is less than 1. It is relatively inelastic. If you see the diagram, you can see that here. You can see that it is less than 1 and it is steep curve. This is steep curve. Next one. In case of unitary elastic, actually this diagram is wrong. What is the shape of the curve? It is rectangular hyperbola. Unitary elastic demand ka case, the shape of the curve is rectangular hyperbola. Anyways, what is unitary elastic? Percentage change in quantity demanded is equal to percentage change in price. Equal it is. So in that case, it is unitary elastic. Can you see the question here? Change is 50%. Here, quantity demanded increased by 50%. 50% divided by 50%. So the answer is 1. I'm so sorry. Answer is 1. This is the third case. And we know the fourth case. That is perfectly inelastic. Whatever change in the price, demand will not change. So this is perfectly inelastic demand. Correct? No. If you see the diagram, see what is the shape of the curve? It is a straight line which is parallel to OY axis. This is Y axis. No. OY axis. Parallel to OY axis. This is perfectly inelastic demand. Can you see that? Price has decreased by 50%, but quantity has not changed at all. 0% change. So this is perfectly inelastic demand. Next one, perfectly elastic demand. A small change in price, a very huge change in demand. So this is perfectly elastic demand. You can see that the diagram, a line which is parallel to OX axis, a straight line which is parallel to OX axis. So this is perfectly elastic. So measurement of price elasticity of demand. Formula method is here. Remember what is the formula? Percentage change in quantity demanded divided by percentage change in price. That is the formula. Or you can go for this formula too. This is the one more formula. P divided by Q multiplied by delta Q by delta P. Or what we have written in our notes, that delta Q by delta P into P divided by Q. Both are same. The formula which is given here and the formula which you have written there in your book, both are same. Okay. Now there is one question. Price of the commodity decreases from 6 to 4. What is the change? 33.33%. And the quantity demanded of the goods increased from 10 units to 15 units. What is the change? 50%. Percentage change in quantity demanded is 50% divided by percentage change in price is 33.33%. What is the answer? Kya hai answer? So that you have to calculate. Yes, okay. Next one here, 5% 5% fall in the price of the goods leads to 15% raise in its demand. Determine the elasticity. 15 divided by 5, answer is 3. That means relatively elastic. It is relatively elastic. Arc method. You remember arc method? There is one formula. What is the formula? Q minus formula. Q2 minus Q1 divided by Q2 plus Q1 multiplied by P2 plus P1 divided by P2 minus P1. Correct? No. Same here. Sir, here something different is given, sir. But nothing different. It is same. Q2 minus Q1 divided by Q2 plus Q1. What is Q2 minus Q1? Delta Q. Correct? No. That is given here. Q2 minus Q1 divided by Q2 plus Q1. Sir, it is given as Q plus Q1. Nothing, Baba. Q1 is nothing but Q2. That is change the quantity. So there is nothing changed here. Both are same. Q2 minus Q1 is delta Q divided by Q2 plus Q1 multiplied by P2 plus P1. See this one. P2 plus P1 divided by P2 minus P1. Simplified form it is. It is simplified form. Based on that, you can calculate. This is arc method. What is the importance of arc method, sir? Two important points you have to remember. Arc method, no, it will calculate the average elasticity between the 2 points which is there on the same demand curve. That is arc method. Okay. Now here, you can calculate under arc method. There is one question here. Soon I am going to put this material on your drive, Google Drive. You will get the link for this. Please do calculate the elasticity for all these questions. Please do calculate so that your understanding about the concept will be clear. Plus, you have solved some more questions. Okay. Next one, problem 2 is also given here. That is also based on arc elasticity method. Please do solve it. Next, observation is that which is better? Remember, which is better? Formula method or this arc method? Which is better? I would say arc method. See, arc method or formula method, which is better? Arc method is better. Why? Because both the cases you will get the same answer. Arc method may, so you have to wait. In this case, no. So here, price and quantity. One question is given. So what you have to do, no? First, you have to calculate under arc method. First, calculate the answer under arc method. I'm so sorry. I forgot my this one pencil. I forgot my pencil. That's why I'm scribbling on this. In next class, I'll take my pencil. A pencil with iPad. Very good. So here, price may, you can see that under arc method. First, you have to calculate under arc method. First, calculate under arc method and see that what is the answer. And later, calculate under formula method. Please do calculate under formula method and see that what is the answer. Next, what you have to do, you have to inverse this. So you have to make, instead of 15, write 10, and instead of 70, write 100. And here, instead of 10, write 15, instead of 100, write 70. Now you have to calculate. Again, I'm sure that in arc method, you will get the same answer. Whatever you got answer here, no? Whatever the answer that you got here, and the answer that you'll get a fresh answer that you get by inversing the position. So that will be same. But in formula method, it will not be same. In formula method, it will not be same. That's why I tell you, please do calculate that and you see the result. You only see the result. You will get to know that arc method is better than formula method. Arc method is better than formula method. So next one, point elasticity method. Remember, what is the formula? Number of lower segments divided by number of upper segments. So what is the advantage of this point elasticity method? You can calculate elasticity at the specific point. So just like in this diagram, see A, B, C, D, E. There are how many points? 5 points here. We have to calculate elasticity, for example, at point A. Elasticity, how to calculate? Number of lower segments. How many segments are there? 1, 2, 3, 4. 4 segments. 4 divided by 0. Anything divided by 0 is infinity. At point B, sir, 3 divided by 1. Point B here, at this point, no? Number of lower segments are 1, 2, 3. 3 segments. There are 3 segments here. 3 divided by 1. Answer is 3. Elasticity is greater than 1. And finally, at the point C, 2 divided by 2, which is lower segment is 2, upper segment is 2. 2 divided by 2, answer is 1. So elasticity is equal to 1. And at the point D, 1 by 3, answer is 0.3. Elasticity is less than 1. So that answer. See, in all these cases, you can find that here it is perfectly elastic. This is relatively elastic. This is unitary elastic. This is relatively inelastic. This is perfectly inelastic. So these are the ideas under point elasticity method. Next one, total outlay method. Remember, what is the logic behind total outlay method? So if you have to remember that if the price increases, expenditure also increases. Or if price decreases, expenditure also decreases. In this case, it is relatively, what is the case here? You are right, sir. Correct. So there is some lag, no? There is some lag between what I explain here and the comments here. First, if the price increases and this the expenditure also increases, or price decreases, expenditure also decreases. This is inelastic. This is inelastic. This is inelastic a case or relatively inelastic. That means here, look at this. Price is decreasing. Expenditure is also, total outlay, that is also decreasing. This is relatively inelastic. In case price is increasing, price is decreasing, expenditure, look at expenditure, that is increasing. Price is actually decreasing, but expenditure is increasing 60, 75, 80, like this. In that case, it is relatively elastic. What is unitary elastic? Price increases or decreases. Look at the expenditure, that will never change. This is unitary elastic. This is about total outlay method. So that is given here. See, price increases, then total expenditure, not revenue, it is total expenditure decreases, or price increases, price decreases, total revenue or so total expenditure that increases. This is elastic ka case, correct? No, both are going in different direction. Elastic ka case, price increases, expenditure remains same, or price decreases, expenditure remains same. This is unitary. Price increases, expenditure also increases. Price decreases, expenditure also decreases. This is inelastic ka case. This is in case of inelastic demand. Next one is income elasticity of demand. It is the change in income due to change in change in demand due to change in income of the consumer. Next, the type of elasticity, that is income elasticity. It is change in demand due to change in income of the consumer. Percentage change in quantity demanded divided by percentage change in income. That is income elasticity. Okay, so here you can see that we know that there is if income, there is positive relationship between demand and income, correct? No, demand and income. If income increases, demand also increases. You can see that here. See, if there is positive relationship, that's why if income increases, demand also increases in case of normal goods. But in case of inferior goods, if your income increases, you will purchase superior goods, no? The demand for inferior goods will decrease. So this is income elasticity in case of inferior goods. So here, if elasticity is greater than 1, that is in case of luxury items, correct? No. If income increases, demand increases more than proportionate to change in income. That is luxury goods. Remember that we discussed in the classroom, in case of luxury items, even if I don't have money, I'll make some credit. I take some loan and I'll purchase that. That is in case of luxury items. In case of necessary items, elasticity is greater than 0, but less than 1. That is necessary items. We might increase the demand, but not to that extent. To some extent, we might increase that. Elasticity is equal to 1, luxury or necessary goods. In essence, unitary income elasticity. So elasticity is equal to 1. It is subjective. We cannot give any example here. It is subjective. It depends on the person to person, time to time, and place to place. If your income increases to some extent, demand also increases in the same level. Income elasticity is equal to 0. That means if your income increases or not, the demand will not increase. That is income elasticity. That is also subjective one. But in case of inferior goods, there is negative. That means if your income increases, inferior goods ka demand decreases. Why? Because when my income increases, no, I go for superior goods, not for the, I don't stay in inferior goods. I go for superior items. Correct? No. So this is about income elasticity. Here also measurement ka case, formula method. So there it was percentage change in quantity demanded divided by percentage change in price, where in price elasticity. Percentage change in quantity demanded divided by percentage change in price. But here it is percentage change in quantity demanded divided by percentage change in income. Income. That is the change. That's all the change. And arc method also, delta Q minus delta, okay, Q2 minus Q1 divided by Q2 plus Q1. That is same. Multiplied by, there it was P2 minus P1, where in arc elasticity method of price elasticity. But here it is Y2 minus Y1. Why it is Y2 minus Y1? Because here it is income. In economics, we denote income in the letter Y. This is arc method. Easy one? Yes, sir. So there they have given one summary. Here one summary is there with you. So you just have to go through that summary. Next one is cross elasticity of demand. It is responsiveness of or change in quantity demanded of good A due to change in price of good B. Goods में good product. Percentage change in price of product A divided percentage change in quantity demanded of product A divided by percentage change in price of product B. That is cross elasticity. There are two types of cross elasticity. One is complementary, the other one is substitute. We already discussed about this, correct? No. In case of substitute, if the price increases of one product, the price of one product increases, demand for other product increases. World famous example. What is world famous example? Pepsi and Coca-Cola. The price of Pepsi increases, demand for Coca-Cola also increases. Why increases? Because if the price of Pepsi increases, demand for Pepsi decreases. So the demand for Coca-Cola increases. This is in case of substitute goods. In case of complementary, for example, world famous example, bike and petrol. Petrol. The price of petrol increases, demand for bike decreases, and vice versa. If the price of petrol decreases, demand for petrol bike will increase. Why, sir? Cost of maintenance. If the price of petrol increases, I have to pour petrol into the bike, no? So that the demand for bike will decrease because costly it is. Nowadays, it has become costly, so that people go for its substitutes, that is electric bike. This is about cross elasticity of demand. How to calculate, sir? Percentage change in quantity demanded of product A divided by percentage change in price of product B. So what is the diagram, sir? See, this is in case of substitute, because substitute has positive relationship. Correct? No. See, substitute ka case. Coffee, price of coffee increases, demand for tea increases. Positive. Here, in case of complementary, it is negative. Petrol increases, bike decreases. That is negative. That's why, see, the curve. You can see the curve that it is negatively sloped in case of complementary. Correct? No. Here, look at this. This is complementary goods. This is substitute goods. So this is about cross elasticity. There is one more type, that is no elasticity at all. Zero elasticity. Cross elasticity is zero. For example, the price of LED bulb and the demand for water. Where is the demand? Where is the relation? There is no relation at all. Now there is one problem here. People, please do solve this problem. Same kind of problem that we have discussed in the classroom. And if you have some doubts, you just let me know in the next class. Okay. So these are the problems. There are two problems here that you have to calculate. And the last one is advertisement elasticity. What is advertisement elasticity? Responsiveness of demand to change in the price of to the change in the advertisement expenditure. Responsiveness of quantity demanded to change in the advertisement expenditure. Okay. So there also there are types. Greater than 1 is equal to 1, less than 1 but greater than 0 is equal to 0. So these are the four types. Greater than 1 means relatively elastic it is. Less than is equal to 1, that means unitary elastic. Less than 1 but greater than 0. So that is relatively inelastic. And is equal to 0, perfectly inelastic. Can there be a situation where the quantity demanded decreases because of increase in advertisement? No. Very rare condition. Why? Because I don't advertise anything to decrease the demand. So that's why advertisement elasticity can never be less than 0. It can never be less than 0. This is advertisement elasticity of demand. Now expansion or contraction of demand curve. Expansion or contraction. Okay, sir. Now in case of you remember what is expansion and contraction? Only because of price. Change in demand only due to change in price. This is expansion or contraction. See, price will change, keeping all other things constant. Then it will be a expansion or contraction. See, price increases, demand contracts. If price decreases, demand expands. Remember this diagram. See, look at the diagram. From E to E1, what has happened? Quantity from Q to Q1, it has decreased, no? So we call it as contraction. See, red color. So this red color wala, E1, that is contraction. But from here to here, quantity has increased, no? That's why it is expansion. Same way, increase or decrease ka case. Increase in demand, decrease in demand. So in case of increase in demand, look at this. Not because of price, but because of some other factors. Correct? No, see, demand is due to change in other factors except price. Price is not changing, price is constant, but other factors such as income has increased. In that case, demand curve will shift to right hand side. Can you see this here? So this is increase, right hand side or upward direction. This is increase in demand. Same thing ulta here. That is decrease in demand. Demand has decreased. It will shift to left side. And the last part of this chapter, that is demand forecasting. This unit, sorry, not chapter, unit. So what is the meaning of demand forecasting? It is estimating the demand scientifically, not some assumption. Scientifically, we are estimating. This is the art and science of predicting the probable demand in the future. So we are predicting what will be the demand in the future. That is nothing but demand forecasting. What is the usefulness, sir? We can plan our business. So plans of business managers. Managers can plan the business. If the demand is increasing, they might expand. Correct? No. Planning the decision making. So whether I have to produce that product or not. If there is no demand, what is the point of producing? Whether I have to go for mass production or production in response to the demand. Mass production means I am producing at once. If the demands, example, the best example is raincoats. The demand for raincoats will surge or that will hit to the top in first rain. Whenever there is first rain, no rainy season ka first rain mein, it will hit to the mass. So that is mass production. In that case, mass production is required. But in case of some other non-seasonal products such as water bottles, production on demand, response to demand. So that I need to predict what is the demand. And later information for budgetary planning and cost control. Correct? No. If there is no demand, why will I produce? If I go on producing, cost will be high. I have to keep this in go down. Simply have to pay the go down rent, all these things. Next one, it is good forecast help in efficient production planning. Just now we discussed production planning. So if there is good demand, then I'll produce now. If there is no demand, there is no point in producing the product. Who has to use that product? If I produce it, then I have to use that product. No point in producing that. Production scheduling well in advance because I know whether there is demand or not. I can schedule the production. And finally, overproduction and underproduction can be avoided. You can avoid this if you know what is the demand. Next type of forecasting, there are two types of forecasting. One is macro level forecasting and based on macro level and based on time period. Correct? No, two types here. See, first one, macro level, that is usually industry level and firm level. Macro level means I look at the macroeconomic condition. Example, JSW Steel, big business it is. We will see the industry level forecasting. What is the demand for steel as a whole? That is industry level forecasting. What is firm level forecasting? What will be the demand? What will be the demand for steel? What will be the demand for steel of JSW Steel? This is firm level forecasting. So it depends on macro level. And the second one is based on time period. Short-term demand forecasting and long-term demand forecasting. What is short-term demand forecasting? What is short-term demand forecasting? Short-term demand forecasting is nothing but for near future. Sir, in the near future, what might be the demand? For which I have to produce all my productions ready, all my raw materials ready. This is short-term demand forecasting. We use short-term demand forecasting for keeping the working capital intact. Working capital, how much cash should be there, how much raw material should be there. That is based short-term demand. And long-term demand forecasting is for survival of the business. Now I want to see how long I will survive here. So this is based on a time period. The second one, that is long-term forecasting. Okay, this is about types of forecasting. Now demand distinctions. We know that producers' goods and consumer goods are there. What is producers' goods? The goods which are used by producers for further production. That is producers' goods. Consumer goods, final consumption goods it is. Durable goods and non-durable goods. What is durable goods? I can use it again and again. That is durable goods. What is non-durable goods? I can use it only once. Perishable goods. Derived demand and autonomous demand. What is derived demand? Example, if you purchase one pen, ink is derived, no? So automatically you have to purchase the ink. So that is derived demand. Autonomous demand, example, purchasing one mobile phone. That is autonomous. If you purchase mobile phone, what is the derived demand? Charger. Charger is the derived demand. Industry demand and company demand. What is industry demand? The demand for whole industry. Example, LED lights. The demand of whole industry, LED lights. Now, demand, company demand. What is company demand? The demand for the LED lights of Philips. Philips LED lights. This is demand for company. Short run demand and long run demand. What is short run demand? The demand for a short period of time, and long run demand, that is demand for the a long period of time. Finally, the methods of demand forecasting. How do we forecast? What are the methods? First one is survey of buyers' intentions. We have to see it is complete enumeration or sample survey or end use methods. Correct? No. See, complete enumeration. That means I go on asking each and every customers. That is complete enumeration. I'll ask with them and I'll take their opinion. That is complete enumeration. Sample survey. I don't look at one person. I mean, everyone. I don't ask their opinions of all the people, all the consumers. I go only for some consumers. Some samples I'll take. This is sample survey. And end use method. What is end use method? See, I am giving some goods to one person. He is using that goods for further production. I'll ask him. So this is end use method. How you are using it. So I directly ask end use method. Next one is collective opinion method. Remember that expert opinion and Delphi approach. In case of expert opinion, what is collective opinion method? Collective opinion method is different one, not expert opinion or Delphi approach. Allah, it's not Delphi approach. Collective opinion method is I'll ask with my retailers and wholesalers. I don't ask with the consumers. Instead, I'll ask with the retailers and wholesalers and I'll collect their opinion. This is collective opinion method. Expert opinion, example, Delphi approach. I don't ask the consumers or retailers and wholesalers. I'll give some data to experts, market experts, and I'll ask them to give their opinion. This is expert opinion method. They are experts in that. And we have statistical methods, which is trend projection method. Remember A plus B XY trend projection, which is there in your statistics also. Graphical method, by putting some graphs and by looking at the graph of demand, we will project that. Trend equations, by putting some equations, mathematical equations or regression analysis. So these are the points which are there in your statistics. Okay, same methods you have to apply it here. And some experiments, controlled experiments we do, example, giving some samples and looking at the demand for the samples, or barometric method of forecasting. What is barometric method? By looking at the economic variables, some of the economic variables, we look at that and we will do some projections. Example, interest rate is increasing or employment rate is increasing. In that case, what do? We will look at the we will start predicting about the demand for the future. So these are barometric methods. See, if the employment is increasing, their income is increasing. If their income increases, what I can predict here? That demand in future that might increase because the income of the people are increasing. No. So these are the methods of forecasting. So that is the end of unit number 1. Unit number 2, that is supply unit. Same as demand unit, people, same as demand unit. Demand is in the point of view of customers. Supply is in the point of view of suppliers or producers. So there are determinants of supply. We know that price is first determinant. Correct? No. If the price increases, supply also increases. Price decreases, supply also decreases. price of related goods. Remember, if the price of related goods increases, example, I am selling steel container and steel bottles. These are two are related goods. Why is it related, sir? Both are uses same raw material. Steel. Steel is the raw material. Steel container and steel bottle. Okay. So in that case, if the price of steel bottle increases, cost of production is not increasing, but price of steel bottle increases, then I'll stop producing steel containers and I start producing steel bottles. Correct? No. So that means there is inverse relationship between the price of related goods and supply of related goods. Technology. If technology is increasing, supply also increases. Direct relationship. Factors of production. Price of factors of production. If the price of factors of production increases, then your profit will decrease. If your profit decreases, then supply also decreases. Government policies. Government is giving you more subsidies. That will encourage me to supply more. I will produce more and I will supply more. So these are some of the determinants of supply. And law of supply is same as law of demand. What is there in law of demand? CP minus ceteris paribus. There is negative relationship between demand and price. Same way, in case of law of supply, ceteris paribus, keeping all other things constant, there is positive relation. It is CP plus. Positive relationship between demand and, supply and price. Price and supply. So here also you can see some relation. Supply function, see S of X is equal to function of price of X, price of other related goods, see, price of other related commodity, and price of factors of production, state of technology, T, and G for the objectives of the government, government objectives. Government it is, not producers. Functional relationship, F for functional relationship. And you can see that supply schedule and supply curve. What is schedule? Tabular representation. Curve is graphical representation. You can see that, see, the price is increasing, correct? Supply, look at the price. Supply is also increasing, Baba. And look at the Apple, Oppo, MI, that is mobile phones. Apple phones ka price is increasing. Supply is also increasing. You can see that supply is also increasing. Oppo, supply is also increasing, correct? No. Here, supply is also increasing. MI, supply is also increasing. This is tabular representation. This is called as demand schedule. Sorry, supply schedule. It is supply schedule. Same thing, if I put this in diagram, you can see that there is positive relationship. Why positive relationship, sir? Upward sloping it is. It is upward sloping because there is positive relationship between supply and price. Now, same thing, elasticity of supply. So there are 5 types of, types of elasticity we discuss in our syllabus. Only one type, that is price elasticity. There is only one type of elasticity of supply, that is price elasticity of supply. In this case, what do we do? There are 5 types of price elasticity. What are the 5 types? Relatively elastic, relatively inelastic, unitary elastic, perfectly inelastic. Concept is very similar, but only the one change is the curve. See, here also flatter curve, here also steep curve. It is upward sloping, vertically supply curve, vertical supply curve, and horizontal supply curve. All are same to same, ditto, but only the change is, you can see that there is positive relationship. Just like your demand, there is positive relationship. Everywhere, you can see that there is positive relationship. Here also, unitary elastic supply, you can see that there is positive relationship. And if you see this, perfectly inelastic supply, correct? No, this is perfectly inelastic, parallel to OY axis, and here parallel to OX axis. Perfectly elastic ka case. So these are some of the examples. And here also, there are 2 methods. One is formula method. Remember formula method in price elasticity, percentage change in quantity demanded divided by percentage change in price. Here, what is the change? Percentage change in quantity supplied divided by percentage change in price. That's all the change, people. Nothing else. There is no changes. Okay. So arc method may again same the same, what is that? Same formula. Q2 minus Q1 divided by Q2 plus Q1 multiplied by P2 minus P1 divided by P2 plus P1. Only change is, there it was quantity demanded, Q stands for quantity demanded, but here it is Q stands for quantity supplied. Only that is the change. So these are two methods of calculation. And here also we have expansion and contraction. So what is expansion, sir? Right side movement is expansion. This happens only because of price. There also it was because of price, where expansion in price elasticity mein expansion. Here also because of price, expansion. And contraction is also because of price. See, from here to here, supply has increased. That means expansion. From here to here, supply has decreased. That means contraction. Increase and decrease, sir. See, this is increase. Why it is increase? See, increase, that means, can you see that? See, the price remaining constant here. See the quantity. Here you can see the quantity. Quantity got increased, no? From here to here. But price remaining constant because of some other factors. The supply increases because of change in some other factors other than price. So in that case, you can see that Q to Q1 demand supply has increased. This is called as increase. Right side shift in the supply curve is increase. And here, left side shift in the supply curve is decrease. This is decrease. So same as which is given in your demand ka chapter. And lastly, there is something called as equilibrium. So that our chapter will get over, not chapter, unit will get over. What is equilibrium? In detail about equilibrium, we will be discussing in chapter number 4. So here, what is equilibrium? Equilibrium is that point where quantity demanded is equal to quantity supplied. That price where quantity demanded. Can you see this here? 3. Supply is equal to demand. So the price is 6 rupees, at which the quantity supplied is equal to quantity demanded. This is nothing but equilibrium. Refers to the market situation where quantity demanded is equal to quantity supplied. Sir, how to represent it in the graph? Can you see that this is equilibrium, where quantity demanded, the demand curve is intersecting with the supply curve. So this point is considered as equilibrium point. Sir, above this point, see, price is so much, P1. Look at the quantity. This one, that is Q2. Quantity demanded is Q2, but quantity supplied, here, it is Q1. Supply is more than demand. That means what? There is excess supply. Supply is more than demand. At the price P2, the price is, quantity demanded is more, but quantity supplied is less. This is called as excess demand. Here I can call it as excess, and here it is shortage. Why it is shortage? Because demand is more, supply is less. So this is about the chapter number 2, unit number 2, that is supply. We will discuss about the other concepts in the next coming class, which is on 24th. 24th morning, we will meet again and we will continue with this unit. This chapter, we will finish this chapter and we will be doing chapter number 3 on that day. We will finish that. So what we are doing here, some of the important concepts which are there, no? Only that we are discussing here, not in detail. So I am just, what am I doing here? I'm just reminding you what are the things that you have to remember before going to the exam hall. These are the important concepts that we are discussing here. Keeping this in mind, people, study well, do well, all the best. We will be meeting again on 24th and we will discuss about some of the important concepts in the chapter number 2 and chapter number 3. Until then, people, keep studying, keep growing. Love you all, people. Do well. There are some other subjects which is going to happen now. So please concentrate on all the subjects. This is the last attempt. You have to give your best shot and you have to clear it at any cost. And I'll be meeting you for GST in CA Intermediate. Okay, I wish to see you there. Before that, 2 classes are pending that we will do it in next coming days. Okay? Everyone, thank you so much. by as an end note, I'll tell you that somewhere COVID has come again, so that take care of your health too, and keep studying, keep growing. Love you people. Bye. Yes, sir. Yes, sir. Thank you so much, Pratiksha ji. Thank you. Disha, thank you. Dhanush, thank you so much. Meghna ji, thank you so much. Thank you, sir. Kritika, thank you. Thank you, Kritika. We'll meet again in tomorrow's class. I mean, next day's class, 24th ka class. Until then, bye.